I've done something that most traders never even think about. I've calculated every single bullish engulfing pattern that appeared on gold in 2025. Yes, every single one of them, candle by candle, on the 4-hour chart. But I didn't stop there. I also calculated what would happen if you traded each of those patterns with a simple one-to-one risk-reward strategy. And trust me, the results are shocking. This is not just trading, this is mathematics at work. Welcome to the very first episode of Mathematics by Pips, here, where we decode the hidden numbers behind the markets. Before I reveal the exact number of bullish engulfing patterns on gold this year, let's take a step back and understand why this pattern is so important. A bullish engulfing is not just a random candle on the chart. It's a message. Imagine this. Sellers push the price down, but in the very next candle, buyers completely take control and erase that move. That's power. That's momentum. And that's why traders around the world watch this pattern so closely. But here's the catch. Most traders just see it. They don't calculate it. They don't measure it. And that's exactly what we're doing today, turning candles into data. Now, while calculating these patterns, I didn't just look at a single type of bullish engulfing, because in reality, this pattern comes in many variations. For example, sometimes the bullish candle completely engulfs not only the body, but also the wicks of the previous candle. Other times, it only covers the body, but leaves the wicks outside. In some cases, the engulfing candle is almost the same size as the previous one, creating more of a balance. And there are also situations where the previous candle is a hammer, and the next bullish engulfing candle takes over its entire structure. Each variation tells a slightly different story, and I made sure to calculate them all. Alright, let's get to the numbers, because this is where things get really interesting. From the start of 2025 up until now, I calculated a total of 95 bullish engulfing patterns on gold in the 4-hour time frame. Now, imagine this. Every time a bullish engulfing pattern appeared, we entered a trade immediately. The stop loss was placed just below the low of the engulfing candle, and the take profit was set equal to that distance. A simple one-to-one risk-to-reward setup. With this exact approach, out of the 95 trades, 58 closed as winners and 37 closed as losses, giving us a precise win rate of 59.7%. These numbers clearly show that the bullish engulfing pattern is not just a random formation, it carries a measurable mathematical edge in the gold market. And here's something even more powerful. When the bullish engulfing forms at a strong support zone, or right when a fresh momentum is starting to build in the market, the win rate goes even higher, almost 65% to 70%. In those situations, the pattern is not just a candle, it's a confirmation of strength. Combining engulfing setups with key zones or momentum shifts can turn a good strategy into a great one, because you're aligning pure mathematics with market psychology. So, what these results really show us is this: numbers do matter, and systematic analysis gives us a solid foundation. They reveal patterns that most traders never even notice. But the market is not just about numbers, it's also about skill, timing, and experience. A 59% win rate by itself is decent, but it's not enough to build long-term success. However, when you combine this data with your own abilities, like recognizing momentum or trading near strong support zones, the edge becomes much stronger. In short, numbers give you the map, but your trading skills are what guide you to the destination. If you found this breakdown interesting, don't forget to like the video and subscribe. And stay tuned, the next episode will reveal something even more exciting from the charts.